The futures show. It's time for my chart of the day. Let's take a look at crude oil. A bit of a rally recently, off some lows that we saw down around 76, 77, but still short of the $80 level. I wanted to begin with 5-minute candle chart. The rally up to, well, just shy of 80, missed it by a few ticks, and how we're kind of consolidating. The $79 level's key. It's important to look at when you're talking about time frame specific when describing price activity, right? Again, a 5-minute candle chart shows a high conviction rally off those lows we saw back last Wednesday around 76.89 all the way up to, as mentioned, just shy of 80, and how we're just kind of consolidating around this $79 level. You got a well-defined lower extreme, we'll call it 77.80, and the highs that we saw in the end of last week is your easily identifiable upper extreme. Now, here, a bit of a bullish pattern, but take a look, because this is just a 5-minute candle chart, right? Tough to trade that time frame and do well consistently over a long haul. So I like to say step back, distance yourself from the tick-for-tick aspect associated with the more granular price activity. We don't necessarily need to pick up nickels in front of a steamroller, right? And risk our fingertips at every trade here. Take a look. A longer-term chart shows that we're in a bit of a downtrend. This recent rally that we just looked at, up to, well, near 80, still has us contained and in this range. Remember a minute ago I mentioned how significant that $79 level is? Well, here you can see that on the bigger picture, we're also kind of balancing around 79. Basically, since the beginning of May, we've been in this range. Again, 80 to the upside, and we've got a lower extreme here now on this chart around 77. Again, those recent lows that we saw. So I want to point out here, though, on this chart, you can see off the recent highs around 88. We're talking back in the middle of April. We've seen migration of value lower in this instance, 86, 83, and then again, currently balancing around 79. Speaking of migration of value lower, I want to show you this method of viewing and analyzing price activity is not only helpful in terms of determining trend, but it's also helpful in determining when trend is no longer present. I was preparing these charts to discuss this morning, and I found this gem. This is a chart that we haven't had up for a long time, but I don't know if you guys remember. Those of you who participate on the Future Show on a regular basis probably do remember when we took out 82 back in the middle of April. We raised this idea that the move lower last week, again, brings into question the trend up off those February lows. Basically, we were saying, okay, we're kind of losing some of that momentum to the upside, and here you can see everything since then, well, for the most part, everything has been price decay. Holding below 80 right now, still kind of at stubbornly elevated levels, but definitely easing some of those inflation concerns relative to what we were talking about, again, back in the beginning of April when we were up around $90. All right, now to help us focus on the fundamentals behind the technicals and what has crude prices back below 80, I've got Alan Nuckman here, Chief Market Strategist at bullseyeoption.com. Good morning, Alan. Good to have you with us. Let's talk crude oil off the lows from last week, briefly below 77, as the ceasefire talks in the Middle East appear to be breaking down.
Well, we've been in an everything bull market. Now, crude oil is one of the few commodities that really hasn't participated yet. We bounced off the bottom, but we're a long, long ways away from the 2008 super cycle high. We're not even at the halfway level if you adjust the price for inflation. Now, in the big picture, crude's been roughly between 65 and 85 for the year. So 75 is an important support point to hold. And it looks like we've done so far. Let's see if we can make a move. A breakout of this range targets 105, but 105 should not be seen as a negative. I look at that as a positive because higher crude prices are a sign of healthy demand for the economy. And 105, again, would be half of that 197 record, again, for adjusted for inflation. And back then, you know, you between 2011 and 2014, when crude oil was at around the $100 barrel level, the stock market rallied 30%.
Well, I would push back a little bit. I do agree with you in terms of seeing crude at elevated levels would tie into, or if it did tie into strong demand, economic conditions, that would be a positive. But it seems more so recently tied to some of the geopolitical tensions we've seen. And if that were the catalyst, ultimately, I fear like that would be a major headwind for stocks. Even to see crude at 100 would be a headwind for stocks, right? I mean, you talk about the consumer ultimately and the pressures they would feel at the pump. AAA reporting prices have been coming off. We're talking 361 recently, but I mean, nobody wants to see crude oil prices that high ultimately because it has a ripple effect.
Right, but everything has gone up in price. So crude oil hasn't. That's one commodity that's kind of held back. Like I said, we're in an everything bull market, and the stock market. Look at where we are, and we've had these conflicts, global conflicts, and the crude prices have been relatively subdued. We've got to put this in perspective, Ben. This is not 2008 all over again.
Understood, Alan, but is there no pain threshold? I mean, is that $90 level, for example, 95, that you don't feel like that would derail the momentum? You feel like the focus would continue to be on the positive, not the negative?
Yeah, that's how I look at it. Optimism wins. And what we're seeing here is, and this is important, is that your last guest talked about we've been, and I don't use the phrase, he used the phrase, higher for longer. No, we've been here for longer. Here for longer. We're not going higher. We've been here for longer. There's a big, big difference. And the dollar index has stopped going up. We stalled at this 105, 106 level. If the dollar doesn't continue to go higher and it goes lower, that can be very supportive to all commodities. To every commodity benefits from that weaker dollar. So that's in the pipeline. That happens sometime. We don't know when, but at some point, the dollar stop going higher would be very supportive of crude oil price as well.
Alan, talk to me a little bit about copper prices. Speaking of on the move higher, we were talking about it in the office this morning. I mean, not far from $5. Yeah.
Yeah, we're almost there. That's a breakout. You've seen one of the points I want to make here in your show is that it all comes back to commodities. That every trade, even though some people might not actually be trading commodities themselves and they're getting set up for their trading day, and that's what you do a good job of setting the table there, Ben, is every investment has a commodities component. So obviously people have been trading FCX, Freeport-McMoRan for this copper play. That's going to benefit. If you look at some of the miners in the metals and some of the gold miners even, they really haven't, now they've started to play catch up, but they've been lagging behind the market. So, this is a great illustration of opportunity. As a trader, I'll trade any market, anytime, any direction, as long as I can control my risk and have good liquidity. This is another example of that. Copper is been a play that had been long forgotten about, and now it's starting to make a move. Now you've got are you a turtle trader, or are you going to buy every new high and then just see if it can go higher? That's a momentum move, but that's been working in the stock market as well. The stock market has had every dip has followed by an upside rip, a stair step higher until it doesn't. So momentum's a very, very powerful force that you don't want to fight.
Yeah, trend's your friend. We always talk about that, right? Continuation more likely than change. I guess the question at this point is if we're in, I don't want to put words in your mouth, but a commodity super cycle in many ways, right? If we're going to continue to see stocks rally, commodities rally, the focus on the positive and discount the negative, as we have in many ways seen off the October lows in the face of higher rates, one could argue, right? So there's an argument to be had that could kind of spill over into some of the other areas. But where does this put the Fed? Where does this put the longs, the bulls that have been banking on these rate cuts? Because tough for Powell to make a case to cut rates if we're talking about commodities on the rise in a really strong economic environment.
Well, commodities are on a rise from a very, very low bottom base. Again, if you look at the commodities as a whole group, we're still half of where we were in that 2008 high. Now, this is, the beginning of a super cycle, and we've got a lot more upside potential. And that's what I love here for a lot of these commodities. It's all about risk reward. Look at corn, look at wheat, look at natural gas. They all have made these little bottom bases and a breakout to the upside. So they've got a lot of upside. I'm bullish by nature. There's always a bull market in something, and I see a lot of opportunities in these commodities. Now, I'm an options trader, so one of the advantages, and I want to come back and talk about this, is how commodities have leverage. So you're controlling 5,000 bushels of wheat. You're controlling, you're controlling a lot of gold. You're controlling
all futures products have leverage, but go ahead.
Right. Yeah, $230,000 worth of gold for one contract. So if you get options on those contracts, limited risk options, the way I trade, you get leverage on leverage. So there's some great benefits from some modest moves. A lot of people are under the impression that futures and commodities are only for active traders. You can position for longer terms, months and months, as well for some bigger trends. And I see a lot of potential here. We're just getting into the growing season when it comes to corn. 49% of their corn is planted, which is, below the 5-year average. So, a lot of Mother Nature is going to come into play, and that presents opportunity.
Yeah, well, we've been talking about grain prices, which have been inching their way off recent lows. I feel like it's kind of the handing off of the baton, right? As crude prices have come off, we've seen grain prices inch their way up, and it always feels like it's one of the commodities or another that's kind of regaining that momentum to the upside, even as some of the others pull back a bit. So maybe you're right here, and maybe we are starting to see a more reflection of some of that strength in the economy here in the commodities markets. Alan, appreciate you joining us here. A solid argument and a solid breakdown. A look at across the board some products that you should be watching. Alec Nuckman, Chief Market Strategist at BullseyeOption.com. And we're going to take a quick break. Stay right where you are. When we come back, we got some info.